Traders, what is going on? Excited to be back with you guys. It's been a while. It's been a while since we were together. So I'm going to be wordy today. I really did miss you guys a lot. But this week has been tough. As you guys know, I recently had a child, and so been busy. Been really busy. And this whole week I've been working outside on my shed. Yeah. So this is what my shed looked like previously. I'm still working on it. I've been trading and going straight out there and working on it. This is where I'm at right now. So got some trim work left to do, but it's almost done. So that's what I've been doing right after trading every single day. But let's get into the video. So day trading strategies, tips, and tricks. And we're going to, go over some of the trades I took today as well, base them off that. And going to really give you guys some good insight, some good tips. I've been trading for a while now. Based off of your emotions, based off of the chart, some things that we all can work on. So let's go over some of these trades I took today. Trades. This is what I like about CMEG. So they'll let you know the trades you took today at what time. Usually take about 5 or 6 trades a day, tickers. I cut quite a few trades today, and one of the trades actually did me in well, and we're going to go over that one today. So INSE, let's pull up that one. SGRY. Already got that one pulled up. And what I want to do, where's INSE? INSE. Okay, so yeah, not bad there. Actually took a couple trades INSE. Then we got CFG. CFG down here. Let's zoom out. And Love. We got Love. We're going to pull up a bunch of charts here and go over them. And what I want to do is show you guys that, yeah, you can actually cut quite a bit of stocks. I was probably only 30 to 40% accurate today. But as long as you let your winners work for you, then you're going to be all right. And that's honestly somewhere where I've struggled a lot, is allowing winners to work for me. So you guys see INSE, the first trade here, I actually cut that. SGRY ended up cutting that one as well. And Love cut that one. CFG, these were short, covered a few for some profits. I re-added back into it up at that VWAP test, and it ended up breaking through it, so I cut the rest there. So actually, probably didn't come away very profitable here. Where I made the money was INSE here, scooping this fear on up and allowing it to work for me. So INSE, here's what happened. And I was scooping that fear on up, and my emotions tell me, especially if I'm red on the day. Before this last trade there on INSE, I was red on the day. And you got to be in tune with your emotions. So my emotions were telling me, all right, Kevin, when it comes back up and you're, break even on the day, just lock it in so you can walk away. You want to kind of come unscathed off the day. At least I do. You just want to be kind of break even. But, I know what that emotion is, and I really have to counter it and say, Kevin, no, trade the chart. You got to trade the chart, not your P&L. The chart says this is good. You got to let your winners work for you. See, that has always been my problem, and it's about recognizing those emotions. My problem over the last 4 years of trading has been capping my winners too early and letting the losers work for a very long time. Pretty much, that's how it goes. So something I've been working on a lot more recently is when I'm uncomfortable, trying to find out how to be comfortable in that uncomfortable spot. It's uncomfortable for me to allow winners to be big winners and not lock any in. And see, that's a big problem right there. You have to just trade the chart rather than the P&L. So that's something we're actually going to go over today, is going to be, trading the chart or trading P&L. So let's get into it. Being in tune with emotions. I got some notes here. Self-introspective. Know how you're feeling, when you're feeling, etc. So when you're, trading a stock and you take a loser or whatever you struggle with, we all struggle with different things. That may be, like me, capping my winners too early. So understand that emotion when I'm doing that. So when I'm doing that, guess what? I got to tell myself, allow it to continue to work for me. This is a great setup. So for instance, we all need to predefine our risk, right? Well, there's a couple ways to do that. We can predefine our risk based on our P&L, which obviously, you have to, you need to base your risk on how much you're willing to lose on the stock, obviously. But we want to be focused on the chart. And we want to base our risk off of that. So we're looking at the chart and say, okay, we want to trade and play this stock to this level. Now, how should I size in based on that? Let's say you want to risk pretty much below this bottom trend line. And that's how often the bull flags are traded. So you're risking off of this bottom trend line, and often I'll use the over-under method. So let's say it looks like it's on it, it looks like it's breaking it, and oftentimes we do see fake out breakouts a lot, even with the bull flags. You guys on the low floats, you see these all the time. I used to see them train those low floats all the time. You'll see a fake out breakout. It'll break that upper trend line. Most people trade these off, buying the breakout of this trend line. I never did that. I lost, and I think 99% of people would agree with me on this because I've in fact done videos about this, and most people agree that this is often a trap, especially on the low floaters, buying the break. So oftentimes I buy off a support. So let's say you buy here at the trend. It looks like it's cracking. Look at these lower shadows. It looks like it's cracking. So that's why I use that over-under method. It's got to crack and hold. It's got to crack that level and hold below it. Because oftentimes they will reverse and push back through, and we'll see these lower shadows every single time. Lower shadow, lower shadow, lower shadow. So you can enter here, and then you can scale into your winner. That's something I've been trying to work on as well, scaling into winners. You don't just have to scale into losers. You can scale into winners, Kevin, and allow these stocks to really work out for you. And you don't have to necessarily start capping your winners too early. Allow them to work for you. Become comfortable in that uncomfortable feeling. And a lot of these patterns present themselves daily. So you guys know I use the intensity stock scanners, and it's finding intense moves, fast moves. So we can look at this actually for an example here as well. So we got a fast move on this stock. And here's another setup that's easy to trade, for anybody, amateurs, pros alike. This is easy setup for anybody. Let's say it forms a top right here, and then it starts pulling back. It's red now. It pops back up. This is a short this is a short. So you can risk high a day. Let's say it made a high a day here, $10, bounced up to $9.80. You can short there. You can short on that pop back up, risking $10. And you still have that same 20-cent risk. Okay, I have a max 250 shares if I'm risking $50. That's how the math works there. So you can, start with that 250 shares if you'd like, and then, we start pulling back, popping up, and then sometimes these will break, sometimes they will break out. In this instance, it breaks out, and so you're going to be stopping out right here when it breaks out above that $10. Now, the same principle applies as the last example we looked at. It's got to be over under, because sometimes these will break quick, that $10 hold number, and then they'll retrace the move. So when these are breaking, I'm not cutting immediately. What I'm looking for is it going to hold? Or is it just going to go, 10, 10, 10, and then pull back under $10 and just trap those longs above 10? So that's what I'm looking at there. And this applies to any pattern you're trading, ascending triangle, descending triangle, any pattern you're playing. It just gives you a visual representation of your stop. So you don't necessarily have to be looking at your P&L the whole time you're trading. You can be looking at the chart, which is what we always want to be focused on. So with that being said, I just think it's really important that we are very self-introspective with ourselves. With our own personal trading, we all have our own different edges. You may trade something different than I do. You may be more short biased or long biased, or trade, a certain pattern one way or the other. We all are different. We all trade different. We all experience different emotions. It's just very important to be in tune with those emotions and trade likewise. Just understand them and know how to negate them, know how to trade with them, know how to embrace those emotions and trade alongside of them. Because honestly, that's probably the most important part of trading, is understanding yourself. You find out so much about yourself when it comes to trading. I know I have. It's incredibly self-introspective. Sometimes we don't like what we find out. Let's just be honest. We don't like what we find out, especially if you're an egotistical person. The market certainly is going to humble you in your trading journey. So traders, let me know what you think in the comment section below. Missed you guys. Hope you enjoyed the video. Let me know if you learned anything. Hit that like button. Hit the subscribe button. We will see you all next time.